Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today we're going to talk about it's the first half of 2022. Things have happened. What are you expecting in the second half of 2022? And financially and economically, there's going to be changes. They're happening right now underneath your feet. Are you going to be prepared? We're going to talk about a few things that are going down. This is going to be part one, ladies and gentlemen. Stay tuned for part two as well. How we're going to be stealing from the rich, the assets, ladies and gentlemen, and welcome. Stop struggling now, gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back, ladies and gentlemen. And I want to thank you so much for being here on the Stop Struggling Now YouTube channel page. And 14,000 subscribers is awesome. So thank you so much. And please share the videos because you never know who you're going to be able to help. And notice the members of the channel. A few are listed here on the right hand side. How do you become a member? You hit this join button over here on the right hand side. That helps. And the community tab. Members of the channel receive special messages just for them. They also receive 1 or 2 videos per month specifically for them. And on Wednesday night live streams, they can be the only ones in the chat room. Everybody else can watch. Now, let's get into it. Year to date, ladies and gentlemen, meaning January 1st through June 30th, we are 6 months into 2022. And what has been happening? Well, we're going to go over a little bit of it. The Federal Reserve, as you can see here, has raised the interest rates twice, especially the historic 0.75 or 75 basis points is what it's also known as. And the reactions from that means, you guys already know, credit card rates could increase. That means your debt's going to get larger. Any loan that you receive will be higher than it was 6 months ago. And that means for the biggest assets for most people around the world, and especially in America, a home. When you're trying to purchase a home, that means it's going to cost you more. And if you don't buy now, then later on this year, the interest rate's going to increase again. It could be increased as soon as the month of July as they try to cool down the inflation that's running rampant, ladies and gentlemen. So I'm going to also go into the home inventory. Here it is. This is released on June 13th. And it says estimates that the nation's home inventory will grow in double digits in 2022. And of course, they're going to say offering buyers a better chance to find a home. Now, the question is, like I made a video before, the question really is, do you really want to pay more? The solution to all of this is you have choices to make depending on what state you live in, how much you're willing to pay right now. Are you willing to wait in 2022, 2023, because interest rates are going to go higher as we get into the last half of 2022 and into 2023. The Federal Reserve has already committed to raising interest rates. They already said we need it at a certain level. That means home prices will definitely be going down. So the risk is buy a house now, your home value goes down later. Sure, you will have a lower interest rate now than, let's say, a year from now or even a few months from now. But is it really worth it? That's what you have to ask yourself from an investor standpoint. And I'm going to go over this real briefly because we're going to get to year to date for a lot of the asset classes so you can understand what has happened over the course of this year. But please stand by. This is part one because in part two, we're going to get into let the stealing begin from the rich. And it's going to be because of things like what I'm discussing right now. Here is a home price of $450,000. This is you putting 20% down, 90 grand. Here's a 5.999% interest rate in Indiana because it does matter what state you're in. If you're in California, your interest rate could be like a half a point higher. But nonetheless, 450,000, which is the median home price in America. Your mortgage note is $2,758 when you add in the taxes and the loan. They already included all of this, taxes and fees, meaning real estate taxes and fees. Depending on where you live, this can fluctuate a little bit. It could be $2,600, $2,800. It's within $100 to $150 margin of error because I don't know if this will show, but let's see what happens if you go see California. It actually looks like it went down, which is interesting, instead of up. And then let's go to Florida. And that went down as well. So see 5.958. So it's within $150 either way, even though you saw here it's within 30 or 40 bucks. But you're still paying $2,700 a month. So this is bad, ladies and gentlemen, because I'm going to put in a number that easily could be within the next 30 to 45 days, which would be somewhere like this. And so now people are going to be paying $2,800 a month, and that's about another $100 per month. But remember, your debt to income ratio is going to matter. So somebody's going to have to be making over $100,000 a year, probably more like 140, 150 to qualify for this home for 450, which is the median price, not even the high price or the low price. It's right there in the middle. Now, let's get into cryptocurrency year to date. Now, it's hard to explain everything with crypto, right? Because you have altcoins, you have Ethereum, but we'll go with the granddaddy of them all, the Bitcoin. Because once you understand what's been happening, this gets you to being able to make decisions. Now, I'm sitting here waiting. This says 1 year, so I'm not going to be able to do this because we're 1 year. I'm trying to do year to date, so that figures. So I can't do year to date, but I'll do 1 year, which I have it at, and it's a negative 39.51% for everybody on podcast who's listening to the sound of my voice and may not be able to see the screen. So that's year over year. So like July 5th through July 5th, July 4th through July 4th, somewhere in that ballpark. That's significant, would you not say? You don't want to lose 40% nearly on your investment from a year ago, do you? I wouldn't. And of course, now in 1 month, it's lost 32%, and I'm referring to Bitcoin. So that's just something to think about. Now I'm going to move right along because I'm going year to date. So we're talking about 2020, January 1st through July. Well, we might as well come up to July 4th or 5th. But if we do year to date, the Dow Jones is negative 15%. If you believe that we're near the bottom in certain categories of stocks, and there's some people that do believe that, then now may be a good time to start investing. But again, interest rates will matter and supply chain issues will matter. So keep that in mind when you're making your investment decisions, because you're going to have to make extra streams of revenue. The NASDAQ is down 28%, 28.49% year to date. 6 months, ladies and gentlemen. This is not good. This is not good at all, quite frankly, But again, it's the NASDAQ. This is how we're going to get stealing of assets, because as the price continues to fall, you're going to be able to buy more. And remember what we were talking about earlier this year when I kept saying, do you guys think you really need to buy? Just sit back and relax and let this stuff just crumble, because the only people that's going to be buying it in mass quantities are the same people that's always been buying it in mass quantities. The people that get free money from the Federal Reserve, and they're going to buy up their own shares of stock, or the Federal Reserve is going to go to their desk at the stock exchanges and buy up the company's stocks in order to lift up the stock price. So don't be surprised if you see some days that are going to be popping up every now and then in the stock market. And here we are with Standard & Poor minus 20%, 0.12. 20.12% negative. All three indexes negative by a huge margin. Bear market territory is what they would say if you went. But if we go by all-time highs, we're well below these numbers. We're more than 30% below, for instance, in the NASDAQ. So when is the time for you to make your decision in order to buy something? Is it now? We're 6 months in. There's going to be more pain. The Federal Reserve is trying to stall the economy. At least you're hearing it here at the SSN Nation, because that's what I believe they're doing. And of course they have to do it because there's no choice. The dollar is the strongest against the euro in decades. And the reason why is because of inflation. And that also means when somebody comes to America, it costs them more money. You don't want the dollar to be higher. European partners come here in America. You come from out of another country to America, your exchange rate is higher. That's never no fun. So that stops people from traveling here potentially, buying from you potentially if you're an American company. So you don't really want this discrepancy like that. So again, ladies and gentlemen, this is going to have an effect on our tourism. It's going to have an effect on our economy. It's global now. So just keep that in mind. Now, I want to point something else out to you. Does anybody know what our debt is? You know the market cap of the S&P 500? It's about what our reported debt is. All right. That's very interesting, isn't it? That's a value that's on paper that can fluctuate, which is down 20%. So you add 20% more, it would be in the 40-some trillion dollars just on the S&P worth of securities. Again, keep in mind, ladies and gentlemen, this is the wealth transfer that you've been waiting for. This is not the end. At least I don't believe so. I'm sitting back, relaxing, and finding out. But if you want a dollar cost average on your way down, so be it. There's other ways that you can make some money, because there's a person that posted up something today, and they did Lucid. That went down to a certain level. Lucid fluctuated about 30, 40 cents today. And so I'm assuming they bought at a certain value, and then when it went up 20 or 30 cents, they sold, and they made that difference in the profit margin, otherwise known as day trading. So that's an option that you can pursue during this time frame, in my opinion. And the median existing home sales price, yes, they're saying it's 400,000. I don't know where it is, because I know the median price was 450,000. So I don't know if this was it. Oh, this is in the month of May, I guess. But it's 450,000 right now in the month of June, July. And it says month over month sales decline in 3 of 4 regions, and year over year sales fell in all 4 regions. Now again, ladies and gentlemen, we know they're going to fall, because as interest rates go higher, people will not be buying homes. Who can afford a 450,000 median home price? And it might cost you, if they raise the interest rate again, you could be paying $3,000 a month. And let's call it what it is. You're going to have to be making about $10,000 minimum and have no debt. If you have debt, you're going to have to be making probably around $12,000 to $13,000 a month. So that puts you in the mid 140s, 150s range. So I'm just letting you know that's your household income. So of course, sales are going to decline. Another opportunity for you is waiting, ladies and gentlemen. That's why I say, is it worth waiting for another year and a half, 2 years to find out where this all falls down to? I think it would be, because this will be the great wealth transfer. And keep in mind, I went over this before. Some of you would be saying, hey, Eric, what's going to happen? And in fact, I got to do this every chance I get, because a lot of people don't understand how this works. So the median price is $450. You're going to put down 20%. The interest rate is 6.5. And you're going to pay $28.89 in the state of Florida is going to be your monthly payment, $2,889. But let me show you something. If it changes to $350,000, all right, remember that $28.89. I'm going to increase the interest rate, not from, it's at 6.558. I'm going to go up a whole nother 2 percentage points up to 8. And look, it's 26.31. It's even lower than the 450, even though we went up another 2 percentage points to 8.55 instead of 6.558. So I'm just letting you know, this is why things are not all dire as they make it out to be. They just want you to buy. Instead of, when you realize, wait, if the prices drop and the interest rate goes higher, what's the correlation? The interest rate has to go 2 percentage points higher just on a $100,000 drop. Now, 450. Let's say it goes to 50%, because that's my target. You guys already know 50% is the target. So let's just say we do this. All right, 275. That's 50%. Look at this. Now, I'm going to even go to 10%. 10%, 0.558. Look at this. It's still below the $28.89 for you buying a $450,000 house that could be $275 to $300 in about another year from now. And you would be paying a lower mortgage rate. But here's the kicker. Now you bought the house for $275. The Federal Reserve got their target where they increased the interest rate another 2 percentage points or 3 percentage points over the next year and a half. And now they start reducing interest rates. So now your home price is $275. Then you find out, hey, they're giving us 7% refi loans. Look at this. Now we drop it to 7.558 and your monthly payment is down to $1,913. And then if history goes according to plan and you get down to a 4.558 and you could refi, now you're down to $1,488, and this is including taxes, ladies and gentlemen. So again, this is why it's significant to buy at the rock bottom price that you can get it at. Just because a home price may drop 5% or 10%, that's not enough. We need interest rates by the Federal Reserve to rise drastically. We need another 0.75. We need another 0.50. We need 2 of those by the end of the year for sure. And if that occurs, then prices have to come down. So I'm just giving you that again. Here we go. Let me get back into Bitcoin, which we already did, but this is year to date. So I'm going to show this again. Year to date, we're negative 57%, ladies and gentlemen. So all of you crypto lovers, it doesn't have to be Bitcoin. It could be something else. You have to start making decisions. Is this low enough for you? Again, I see no reason to buy any asset class right now. Now we're going to get into silver, gold, and not even any other precious metals, because as you guys know, I made a video last week. And gold at that time was in the 1,850 range. Silver was $20, $21. Inflation is running rampant. It's safe to say this isn't your grandmother's economy anymore. In the old days, when inflation was running rampant, everybody put their money into gold, silver, and precious metals, which there would be a demand for it. So therefore, the price would start creeping up. Well, as I mentioned before, and if you missed that video last week when I was talking about the odds of gold, silver acting like it did traditionally, is slim because people have crypto or other assets that they are willing to invest in. Hell, people are out here investing in collectibles. They're out here investing in cars. They're out here saying, you know what, I'm going to invest in some other assets, art, because they're going to hold better value than gold, silver, or anything else because it's limited, right? So here we have it. Year to date, silver is down 14.95%. And I'm going to say something else. You're actually down more than that. Year, January 1st through June 30th or July 5th, whatever. It's more than that. You know why it's more than that? Because some people, again, they forget when they bought their silver, they paid a premium. So just like right now, if I wanted to buy this for $19.52, I can't. I can't. I mean, if it was in the open market, maybe somebody will give it to me like that. But what I'm saying is if it's from a dealer, this is going to cost me $23 to buy this. So I'm going to pay like another 20% on top of this. So when this was $25 and somebody had to pay $28 or $29, think about that. $28 or $29 due to the premium price, and now you're down to $19. That's $10 per ounce. That's more than 14.95%. And all you gold and silver stackers, listen to this. When you're sitting there happily buying gold and silver 3 years ago at $13.50 for 10 an ounce, and then you happily bought when it went up to $19, your dollar cost averaging up every time you do that. So now when you bought from, let's say I'll round up to 20 and 13, that's $7. So now your dollar cost average is $16.50. And then when it went up to $24 after it dropped from $28, you said, oh, this is another buying opportunity. But see, now you're buying at $24 and your dollar cost average is now approaching somewhere $18, $19, $20. And now here the price is back down to $20. And never mind, I'll still say you put those premiums on. And that's why I say, ladies and gentlemen, you have to tread cautiously, but you should still get a little bit of this gold and silver. Remember last week I made a video. Now is the time to consider getting the gold, silver, and precious metals. You knew the prices were going to go down, right? You guys know that. Okay, now here's the gold year to date, negative 1.73. Again, last week you can see on the video it was 1850, I believe, and here we are. It's dropped 75, let's call it $75. And their year to date is 1.73. And again, inflation is running high. Traditionally, gold's supposed to go up. And that's all I have to say today, ladies and gentlemen. I just wanted to go over this again because I want to set everything up for you, because if you're running around trying to work your behinds off, you don't know what's happening in all these markets. Today, out of nowhere, the plunge protection team had to step in and save the stock market. They were down hundreds of points, a full 2 percentage points on most indexes. And then within the last hour or two, all of a sudden, magically, 2 of the indexes end up in the positive. 1 still ends up in the negative, but it would have been a bloodbath. So what triggered it? Did anything happen today? Nothing that we know about. But here we are again with manipulation on the stock market, because they got to make sure it goes up, because some people are going to say this is the bottom, and you're going to stair step your way down if you keep doing this DCA, and that's all I'm going to say about it. So let me know what you think down below, and stay tuned for part 2, because we're going to get into the stealing of these assets. These assets plus some others. We're going to talk about what we're going to be looking at and what we're waiting for. And I want to know what your opinions are, because individually, individual stocks or individual asset classes, you might have an opinion. But let me know what those opinions are right now. Put them down below in writing, because we can always come back to it and check it out later. And with all that said, thank you for watching. Thank you for listening. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here, and that's why we have to know what the landscape is going to look like, but not only today, not only in the last 6 months, but you have to be able to come up with a rational calculation on why you may invest or don't want to invest in the future. You have to make plans for the future no matter what you do when it comes to financials. So you're going to have to research a little bit. So hopefully I've helped you out a little. And with all that said, keep your head up, keep moving, and I'm out.